Welcome to LJ Weekly Housing Update, and this is for week 2 for December 22. And we're going to go over some interest rates, see how the market is, what's the news headlines, and we're going to compare some down payments. If you were to put down 10%, 15%, 20%, how will it change your monthly income, your monthly payment? How will that change? And how much is the difference? So we'll go through all of that. So let's get started. All right. All right. So first, let's get started with the interest rates. So we'd like to give an example of if you were to purchase a house for $625,000 and you were to put down 20% down payment, and your FICO score is or your credit score is around 620, and you're going with the FHA loan, and you're living in Queens, New York, and you're looking for a single family, and it's going to be owner occupied. So based on this information, this was from last night, the rate sheet that the loan officer might provide to you may look like similar to this. So on the lowest end, you might see the interest rates of 5.5, where there is a discount points 2.7, and your monthly payment will be around 2,889. On the other end, on the highest end, you might see the interest rates at 7.125, whereas the monthly payment might be 34.28. So this is the rate sheet that the loan officer may provide to you, and then you can see if you want to actually buy down the interest rate or not. Okay, so this is what we're looking at for now. Sorry about that. So if you were at 20% down payment, right, your loan amount is going to be 500,000. And if you're putting down 15% down payment, your loan amount is going to be 531,000. And if you're putting 10% down payment, your loan amount is going to be $562,000. So you can see the difference that obviously the more money you put down, the less your loan amount will be, right? And yeah, I just changed it. Okay. So the terms will be 30 years, right? Oh, okay. So the down payment with that 10%, you're looking at $62,000. 15%, you're looking at $93,000. And for 20%, you're looking at $125,000. And for the rate, obviously for all three of them, we're taking it as 5.99. And your true APR, this includes all the fees, you're looking at 6.31, 6.04, or 5.99, right? The most common question that we get is how much the mortgage insurance will be if I put down less than 20%. So you can see that if you're putting 20%, you're not paying any mortgage insurance. So it's $0 here. But if you're putting 15%, you're going to be paying around $89 for your mortgage insurance. And if you're putting 10% down, then you're looking at around $178 for mortgage insurance per month. Okay. So your annual principal and interest for year one, with 10%, you're looking around 40,000. For 15, around 38,000, and for 20%, you're looking around 35,000. Okay, and your monthly, right, monthly expenses, your monthly payment, you're looking around for 10%, 4,100. For 15%, you're looking at around 3,800, and for 20%, you're looking at 3,500. Okay. And cash to close obviously is going to be different because you're putting less down. So for 10% cash to close, 62,000. For 15%, 93,000. Or for 20%, you're looking at 125,000. Okay, this is the down payment. This does not include any closing costs that the loan officer will give you, but this is just strictly what you have to bring down based on your down payment here. Okay, so the point of this is that you want to look at your savings. See if you can afford 20%, then sure, go ahead, put down the 20% and go with this. But if you have 15% and you still want to purchase a house, why not? You want to go through this with the 15%. Or if you have 10% down payment, you still want to purchase the house, then you would go with this and bring in for cash to close $62,000 for the down payment. Okay. Again, it depends on your affordability. And on the next slide here, we're going to go through the same 10%, 15%, 20% down payment. Your monthly is going to look something like this: $4,100 for 10%, $3,800 for 15, or $3,500 for your 20% down payment. And the difference here, again, is that for down payment, if you're putting 15%, you're going to pay $276 extra compared to your 20%, or $552 difference if you're using 10% compared to 20%, right? So again, it really depends on you, your situation. So always compare these with your loan officer and see how much down payment you want to put down. Not you what you can afford. You can probably afford 20%, but maybe you want to invest half of that in something else and put half of that in the housing market. You can do that. So compare it and see what makes sense to you. All right. So let's look at another program that we have. We offer is called Home Ready. It's a conventional mortgage that is provided by Fannie Mae, and this is for where this is a conventional loan. Most people think that you need 20% down for conventional. That is not the case. So there are programs out there where you can put lower than 20%. So with this program, Home Ready, you can even put as low as 3% for conventional. Your FICO score has to be a minimum of 620, and you can purchase one unit, right? One family, and you can put down up to only 3% down. Or if it's a two family, you can put down 15%. Okay. Or if it's a 3 or 4 units, then you can put up to 25%. Okay. But the lowest, we're looking at one family up to 3%, right? And to be eligible for that, you got to talk to your loan officer and they can give you all the details. But for a majority of them, will tell you that the borrower's income has to be around 80% of the area median income. Okay? Uh, there's a lookup tool that the loan officer can give you just by looking up your address and looking up your income and see if you qualify or not. But just note that there are programs out there for that are conventional that allow less than 20% down payment. Okay. Okay. And this is for our realtors out there. Stratus, MLS, LIBOR, they're always providing online classes. So, jump onto those classes and, gain some knowledge. So they have to do it different as a sellers, as a buyer, as an investor, commercial. They have plenty of classes, ongoing classes. So just to keep an eye on it. And if you're a realtor, you usually get an email from them as well, and see which one interests you and actually take those classes, right? It will definitely help you out. And if you want to get your custom plate, you can go to your DMV, or you can do it online, or even we can help you as a LJ insurance company, where we can order this custom plates for you where it has a realtor logo, and you can customize anything that you want on here. Okay. So it makes you stand out a little bit. So I hope this helps. And if you have any questions, please contact us and let us know how you feel about these videos and how we can improve those. I hope this helps. You guys take care.